Well, it's official. Inflation is out of control. What can we do with our investments? Stay tuned. What's up, Fruitful investors? I hope you're having a great day. Okay, so the numbers came out yesterday that inflation in October was 6.2% more than this time last year in October. This is the highest number since 1990. In September, we had 5.4%. So we've already gone up 0.9% in 1 month. Now, Jerome Powell at the Fed is saying, if you don't forget, inflation is transitory. Don't worry about it. It's just temporary. It's all gonna come back. Well, we're getting more and more confirmation that it is not transitory. It is probably here to stay for a while. And the market yesterday, I'm shooting this today, you guys watching this tomorrow, the market today, yesterday for you, is dropping like a rock, which is good because the S&P 500 and all the ETFs, QQQ, which is my favorite stocks, they're all overvalued or just too hot, too overheated, overbought. So it's good to have a pullback once in a while, but this news is not the best news for the regular Joe. Now this video is for the people who wanna not be regular Joe and how to make some money. So food is up, gas is up, building materials are up, the energy sector for your hydro, or you guys in the States call it electricity, your water, everything's going up, and most people's wages are not going up. So what do we do? How do we get more money? How do we continue to get ahead of this inflation curve? Because if you're not planning on how to get ahead of it, it ain't gonna be good for you. Number one, what we gotta do is stop working dollars per hour, which basically means you're general employee. You gotta stop being an employee, man. You gotta really start doing that side hustle, whatever you gotta do to start your own business. Now, if that's not for you, you don't wanna start your own business, you don't really have any hobbies or things you can make a business out of, we can get to the next step, which is investing, but you gotta start making more for your money because as an employee, what are you getting every year for a raise, if you're even getting one? It's typically about 3 to 5% a year, right? If you're lucky, maybe 50 cents more an hour, $1 an hour, $2 an hour more if you're lucky or something, right? So 3 to 5% raise is not gonna cut it when we have inflation of 6% or more, which is that number I got a feeling is a lie as well. All of us in the business world, in the investing world know it's probably around 9, 10, 11, 12%, okay? That's the cost of food going, especially food, eggs, bread, water, whatever. It's all going up by a hell of a lot more than 6.2%, but the Fed here is saying 6.2%, so we'll go with it, but in reality, we know it's more. So what I'm saying is, if you're only getting a 3 to 5% raise at your job every year, and inflation is 9%, okay, you're down 5, 6, 7, 8%, depending on your raise. That's what you're making less every year. So you're making less money every year. Even though you're getting a raise, you're actually making less if you understand how the market works and how inflation works. So investing is the number one best way to hedge against inflation. Number one, I like real estate investing. That's my bread and butter. That's where I've made most of my money. That's how I started off in this whole thing in my investing career, and it's paid off fabulously. So the biggest number of millionaires have done so through real estate investing. Why? It's a hard asset, it's physical, it ain't going anywhere except up. We know the price of real estate, even though it's pretty crazy right now in 2021, I guarantee we'll be saying this in 2022, 2023, 2024. Real estate always goes up. Why? It's a hard asset and you need it. People need a roof over their head. So it's a great thing to own. And you make money 3 different ways, which is why I love it. You make it through cash flow. So your tenants are paying your mortgage, your property taxes, all your expenses. In addition, they're paying more. So you're getting some cash flow in your pocket every month. That's fantastic. You're getting money through appreciation, which means the property value increasing every single year, or in this market, every single month. And you're also getting money by mortgage pay down. Your tenants are paying down that mortgage. So your spread in real estate keeps going up and up and up and up and up every single year, which is why I love it. Or you can do what I do, which is now in my career at this point in my life, I'm focusing more on flipping real estate. So we're buying properties that are really crappy, they need a lot of work, we're buying it low, under market value, we're fixing it up, and then we're selling it up here high and making that money in the middle. So that's what I love, a little bit more of an advanced strategy with the flipping, but real estate in general is a fantastic, one of the best ways to invest your money. Now, I know that it requires a lot of money to get into real estate, 50 grand, 100 grand. The barrier of entry to real estate can be pretty high depending on the market you're living in or investing in. So I get it, it's pretty hard. Let's go to number 2, the stock market, a little easier to a lower barrier to entry. You can invest with $100 in stock market. So there's like zero barrier to entry. And if you're buying value stocks or just quality stocks like what I do, that's what I really recommend, especially if you're a newbie and you're starting off, you know, the boring old S&P 500, your grandpa and grandma probably told you about buying this, the QQQ, any ETF is what I'm really all about with a stock strategy, which is an exchange traded fund. Say that 3 times fast. An exchange traded fund, which means basically is a pool of stocks that you're buying rather than just buying one company, Facebook, Apple, Amazon, whatever. You're buying a pool of several hundred companies or several thousand companies, and that ETF is acting like a stock, which means you can buy and sell at any time. You can trade options on it at any time. So that's why I love the stock market. If you're buying quality, boring stocks, that's what I'm all about in my real estate strategy. It's all I'm about in my stock market strategy, and it's all about in my third wave, how to hedge against inflation, the crypto investing strategy. Slightly more volatile, not slightly more, very much more volatile, and a little harder to understand. I get it for some people because it doesn't really make any sense, but it is definitely the future, especially if you're doing the value coins, kind of like what I do with the stocks, with the S&P 500, the boring stocks. I buy the boring cryptos, right? So I'm buying Bitcoin and Ethereum. That's predominantly where my money is. I'd say 90% of the money in my crypto portfolio is in these two, and 70% of that 90% is in Bitcoin. So it's here to stay. The technology is sound. It's proven. It's been here for many years, since 2008, but really kicking off since about 2012, 2013. So it's here to stay. It's proven itself. It's replacing the store of value for gold, a lot of people are saying. So the market cap is going to overtake gold perhaps in the next 5 years, which is just mind-blowing. So it's here to stay, and that's why I like it. It's almost guaranteed. The tech is solid, and it's replacing the store value of gold. You can't beat that. So while the world is on fire, what it seems like, especially lately with what's going on with the you-know-what, and then with the federal government finally coming out with the true inflation numbers and the big date of December 3rd, I believe it's December 3rd, where the American government is going to decide whether they're going to pay their bills or not, or have to go possibly bankrupt. That'll be a good day. So we're holding tight until December 3rd before we really jump in the stock market. But after that day, it doesn't really matter. We're gonna buy stocks anyway because there's always strategy. But basically, the world is crazy and you wanna get ahead of it. Don't get caught up in the headlines. Don't get caught up in the rat race of trying to excel at your job. Let's get that 50 cents more dollar an hour. Let's get that dollar more an hour every year. You're not gonna make it, man. With inflation going up and the cost of goods and services continuing to go up and wages stagnating, man, you gotta get out of the rat race, get into real estate, get into stock markets, get into the crypto world, and let's go. I'll see you in the next video.